You want to short the market because you think the market's going down. Well, here are 7 ways to go about it. You may have thought about shorting stocks, and if you're not quite sure what shorting a stock is, I'll talk more about that in a moment. But rather than shorting a stock, maybe consider an ETF, an exchange-traded fund that represents a segment of the economy or businesses or a sector, such as the SPY, which represents 500 of the United States' biggest companies. You'll probably need specific permissions to short stocks from your broker because it can be rather risky. Essentially what you're doing is borrowing stock to sell right now. And if it goes down, well then you'll buy it back and give it back to the person or broker that you borrowed it from, and you keep the profit. And of course, if it doesn't go your way, you probably owe somebody some money. And of course, if you think the market's going down, you could buy a put option on an ETF such as SPY or the QQQ, which is the Internet and Technology stocks, or possibly the IWM, which is the Russell 2000. It is important to remember when it comes to options, time is not on your side. So you need to consider when you think the market's going to go down. Is it going down in the near term, over the next few weeks, few months, over the next year? That will determine the expiration of the option you want to buy. But you also have to remember the further out you go, the more expensive, the higher the premium of those options. Of course, if you think the market's going to go down, you could sell call options and earn a premium right now. However, I recommend that you have the securities or the finances to back it up in case the market doesn't go your way. If you think there's going to be a complete meltdown and panic, well, you could buy options on the VIX. The VIX is kind of a measure of volatility, and the ETF is UVIX. If you think shorting stocks or buying and selling options is a little scary, no worries. There's some other solutions. You can buy ETFs, exchange-traded funds, just like stocks, that focus on shorting specific sectors and industries. If you want to short the S&P 500, then check out the ETF SH. And if you want to get really aggressive, try the ETF SDS. And one of my favorites, just because of the name, is shorting the Dow. It's dog. If you want to short internet and technology stocks, well then consider the SQQQ. When shorting the market, be sure to have a plan. You've seen it before. When the market drops, it drops big and then starts to build its way back up. And the thing is, when it's going back up, you're losing profit. So know when you want to get in and when you want to get out of your short. And I'll see you in the next video.